some trading ideas, but the stock of the day in the mid-cap space clearly is KPIT Technologies. Very good numbers coming in, and this is after many quarters of a disappointment that the company has reported. So this time, the dollar revenue growth has come in at 5.3% quarter on quarter. The profits have jumped by almost 70% quarter on quarter, and it's a big bump up in their margins. Now they're sitting at almost 14% margins versus 9.5%. Remember, this stock has already fallen about 30% this year on the back of many quarters of underperformance in earnings, but this quarter there's been a huge surprise that the company has delivered. The margin expansion in Q2 is sustainable. That's what the company has indicated to a lot of analysts as well. So let's get the management on board now. Kishore Patil, the co-founder, CEO and MD of KPIT Technologies, joins us to talk about that. Mr. Patil, good morning, and it's good speaking with you this morning. It was a very strong quarter for KPIT Technologies, dollar revenue growth of 5.5% almost. Was there a benefit of a one-off, and therefore is this quarter's performance sustainable?
So I would look at this result as we had mentioned that our first focus was getting back to profitability, and we have been in a position to show significant improvement in the profitability. We have been in a position to absorb the salary increases which happened during this quarter as we had postponed it for the last quarter. In spite of that, we have been in a position to show 4 to 5% increase in the EBITDA margins, and that is what our focus is. And as we had also said that Q3, these EBITDA margins are absolutely sustainable. In terms of growth, naturally, this is a significant growth. The next quarter, naturally, we lose about 2 to 3% just because of the days. Number of days in that quarter, but we are sure that we will be in a position to at least have the same set of numbers in terms of top line. We look at it flattish or a little bit higher. So that's how we look at it. So we do believe these are sustainable because the underlying growth under these numbers have come out of 2-3 trends. One is automotive growth. The second is a growth out of utilities. In terms of region, we have grown in Europe, we have grown in Asia, and we have had marginal growth in US. And more or less across the practice areas, we have grown. So we do believe this is a sustainable growth. Naturally, 5% per quarter is not is a good growth, and we generally have these few quarters in a year like this. But overall, this is overall sustainable performance.
But you're saying that Q3 is going to be flattish because of number of working days.
Right. Yeah.
Okay. All right. So let's talk about the growth rate for FY16. If you compare it with the industry, can you catch up?
So for us, this year has been a bit different. Generally, we are always, on top of that growth trajectory. But this year we had, we started on a very weak last year quarter Q4, and hence our priority has been to really set our performance in place. And as we had said, we didn't want to do it just one time, but we wanted to relook at all our processes, put in system which make it sustainable, and that's what our objective is. So for Q16, we believe what we have said at the start of this year, we will be in a position to make that kind of numbers what we have told. Hopefully we can do a little bit better because of where we are today. But we do believe that this gives us a very good hope for us to get back to at least industry level, if not higher growth henceforward. For this particular year, because first quarter was not the best, we would not like to comment on that.
All right, you've indicated that margins are sustainable, so 14% and above, or is there scope to improve margins higher than that?
No, certainly there is a scope to improve the margin. This quarter, the margins increased because of 2-3 reasons. As we had said that our utilization was very low, so we had to set that right. The second thing, we wanted to put the pyramid in place. So we have hired a lot of freshers during this time, which allowed us to really correct the pyramid and the cost structure. And then actually growth helps. And so absolutely the quality of growth in terms of offshore and the margins, that becomes important. So we believe that these are certain areas which we have put in place, which will ensure the similar improvement in the profitability even going forward. So we believe that we have still a few percentage points to improve our performance in Q4.
Okay, Mr. Patil, all verticals have done well except manufacturing. Why has manufacturing showed this decline?
So it is nothing specific. I mean, I think there is, if I understand correctly, it's a flattish more, a very marginal degrowth. I think it happens because of one or two large customers, swings or some of the large projects. But there is nothing which warrants that. Actually, we believe that in the areas like both in Europe and Asia, we have a very strong pipeline in manufacturing.
Okay, let me revisit the margin point then. The Q2 margins had a negative impact of 200 to 225 basis points because of a wage hike, which will not be there in Q3. So shouldn't margins increase by 200 basis points, all else equal?
No, so I would not say that because of multiple things. And actually, these salary increases would be there. Also, we do our some corrections or promotions, in this quarter. That will be there. As I said, there are a lot of leaves people consume during this, both Diwali as well as Christmas. So in that sense, this quarter does not allow us to expand that margin on operational performance.
So once growth picks up in FY17, what will be the margin range?
No, as I mentioned to you, we still have headroom for improving the margins. Naturally, last quarter we were also held by dollar rupee rate, it also plays a certain part. But we still believe that over next year, 12 to 18 months, we have certainly 3-4% percentage which we can improve, barring any unfavorable currency movements.
All right, so can you tell us what are the plans with the cash on books that you have of almost 440 crores?
So we have a significant focus on improving the cash flow, and we were in a position to reduce the DSO significantly. Our cash flows and a very strong recovery during the quarter, and I think that has been one of the questions in terms of how we can convert our profits into cash for the quarter. So I think this quarter showed us a very strong performance on that count.
All right, we leave it at that. Thank you very much, Mr. Patil, for joining us with those numbers. They have definitely fired up investors and traders today. That stock up about 12% at this point in time.